What if you couldn't get your money out of your bank? What if you went to pay a bill tomorrow and you simply could not do it because your bank no longer allowed you to access your money? Sounds crazy, right? What if your bank started taxing you an annual percentage to keep your money there beyond their usual card fees and all that fun kind of stuff? Well, this week, millions of people around the world experienced that very thing. In fact, this news video is just going to talk about banking stories from around the world because I just want to underline the insanity which is happening in the banking sector. And this week is not special. This is just another week in banking. Before I break down all of this wild news for you, a big thank you to Exodus for sponsoring today's episode. I've personally been using their wallet for years and absolutely love it. It is a great multi-currency wallet that allows you to take control of your financial destiny and, yes, to be your own bank. Very important, of course, considering today's topic. You can download Exodus using the link below on either mobile or on desktop, and you can now bring an extra layer of security to your Exodus wallet by linking up your Trezor wallet. So, let's start off our journey of global banking dysfunction in India. The banking situation in India is so bad that the Reserve Bank of India had to tweet on October 1st, reassuring the general public that the Indian banking system is safe and stable, and there is no need to panic. You know when the central bank is tweeting that kind of crap, that yes, it is indeed potentially time to panic. Remember, bring your towels, guys. Of particular interest in India is a bank called PMC, which is in big trouble. And the bank being in big trouble is leaving millions of depositors in even bigger trouble. Apparently, the bank had created thousands of fake accounts to hide bad loans and, of course, committed massive fraud. No surprises there, really just standard operating procedures for a bank. However, in response to this, the RBI imposed withdrawal limits on bank customers, meaning that many depositors were suddenly left without their money. Now, that limit was later raised, meaning that most account holders could get their money out, but still around 40% of PMC depositors remain unable to get their money out. Well, PMC has been the biggest bank that the RBI has had to introduce such controls at. It is actually the fourth such bank to come under restrictions like this year alone. Now, all of this, by the way, comes just a few years after India's shock announcement to ban the 500 and 1,000 rupiah notes, forcing people more than ever to have to rely on criminal banks. What is the lesson here from India? Your bank, your money, not your bank, not your money. By the way, the Reserve Bank of India has cut rates 5 times this year. But remember, the RBI said not to panic. Moving on to Turkey, around 2.5 million taxpayers who have not been able to pay their debts, and another 800,000 companies and persons owing money for Social Security expenses have received a notice this week from the Turkish government that their bank accounts have been frozen. In total, $26 billion worth of people's money has just been withheld from those people. And okay, sure, they owe debts to the government, I get it, but I highly doubt that ruining these people's lives by cutting off their access to finance is going to help them pay their bills. And also, in Turkey, the situation, a big factor here in many of these companies' individuals' cases of being unable to pay their taxes was the dramatic fall in the Turkish lira last year, losing a full third of its value, meaning that businesses or employees for companies with foreign clients or debt obligations abroad were largely unable to continue operations. That was not necessarily their fault. The people who just got their accounts frozen, it was the fault of the government who froze their accounts by screwing the lira. Makes sense, right? Sounds like a service you want to sign up for? Get a Turkish bank account today. Now let's move on to Hong Kong. Reports are coming out that Hong Kong ATMs are simply running out of cash. While it's not immediately apparent if this issue is simply a short-term thing due to security issues around delivering cash to ATMs during the protests, or if this is actually a long-term crisis due to citizens of Hong Kong basically making a bank run on cash, withdrawing as much cash as they can get their hands on. You have to keep in mind that most countries only have around 8 to 10% of their total fiat value in physical form, which basically creates a situation whereby a cash crunch crisis can quickly form. Also, cash deposits have fallen by nearly 2% in Hong Kong in August, meaning that people are putting their money under their beds and simply not trusting the banks to hold their money for them. Probably not a bad decision. And while most people will simply be content to hold their cash in their hands, the elites of Hong Kong are also not sitting idly by while all of this is happening. Billions of dollars in capital has fled the country, much of it going to Singapore. Now, not being able to access cash, this may not sound like the end of the world, but you know damn well that the banks will be narking on people who buy things like masks or spray paint or hard hats or facial recognition blocking devices, etc., etc. You have no privacy when you swipe your bank card. The banks know, and if the banks know, the governments know immediately or can simply find out at the flick of a switch. Cash is powerful, which is exactly why governments continually are restricting access to it globally. Now on to Germany. German lenders are passing on the pain of negative rates to their retail clients. The country's second largest cooperative lender, Berliner Volksbank, started to apply a minus 0.5% rate on deposits exceeding 100,000 euros, meaning that big account holders will now be taxed by their bank. The move from such a big bank is likely to encourage other lenders to follow suit, with both Deutsche Bank and Commerzbank, the two biggest banks in the country, signaling that they are warming up to the idea of passing negative rates on to their depositors, which means they're probably planning on doing it really, really soon. At least 34 German lenders have already opted to pass the negative rates on to some of their clients. Most of them, however, are quite small banks, and the thresholds that they have put in place are often well above the 100,000 euros that Berliner Volksbank has proposed. And look, while you may not shed too many tears for the large account holders sitting on more than 100,000 euros, how long do you think it's going to be until they lower the limit to 10,000 euros or 1,000 euros? Remember, ask not what your bank can do for you, ask what you can do for your bank. Banks. Just wait until the ECB cuts rates again, and they're gonna do it because really there's nothing happening currently to say that the ECB is not going to be cutting rates again. And just ask yourself, how many of these large euro holders will not be interested in losing 0.5% in what is basically a bank tax, really, more if additional cuts happen, of course, plus an extra 1% lost to inflation? How many of these guys are going to start looking for alternatives? Yes, many are going to choose gold, but not everyone. Not everyone. Over in the United States, the overnight repo market is still in big, big trouble. Basically, banks are no longer trusting each other for overnight money obligations, and the rates have gone through the roof, with the NY Fed having to step in to save everybody. The insiders on Wall Street know that something is up. They know someone out there is very sick and they don't want to be playing ball with them anymore. And the New York Fed has basically written a blank check for Wall Street, with the lifespan of that blank check continually being increased, with some even saying that this may become a permanent thing, with the NY Fed putting up as much money as Wall Street needs for the overnight repo market. Welcome to your next phase of quantitative easing, America. And in other American banking news, a new milestone has been reached in terms of massive banking innovation. Bank overdraft fees have hit an all-time high of $33.36, and ATM cash withdrawal fees have hit an all-time high of $4.72. Remember, increased fees means more innovation for banks. Yeah. In Australia, the Reserve Bank of Australia is likely to start printing money to try and solve its problems. Up to $200 billion is the number that has been floated around, as the 3 rate cuts which have happened this year have failed to have the desired effects. And when rate cuts don't work, they just print money. It's inflation. Because debasing your currency and front-running your own citizens always solves deep systemic issues in the economy. And don't worry, Israel, New Zealand, the UK, and yes, probably the USA, you're all going to be getting some rate cuts again very soon. And when that fails, I'm sure that the governments will just print some more money. And finally, over in China, the government has had to bail out 2 large banks, while at the same time reassuring everyone that these are just isolated cases and that there is no systemic problem in the Chinese economy, which probably means that you can expect more Chinese banks to get bailed out in the coming year or two. Meanwhile, the Chinese central bank is just mad stacking gold, adding another 100 tons just in the last month. Now I know you might be thinking, wow, Lark, that's a lot of really crazy stuff going on, and it is a lot of crazy stuff going on. But the shocking part is that this is just 1 week, maybe 8 or 9 days, but 1 week, guys, and this barely scratches the surface. There are a host of other stories about bank scumbaggery and complete incompetence that I did not even include in this video. Otherwise, we would be here all day long. The key message is this: your money is not safe with banks. The insurance funds for banks, they do not cover the massive risk and the exposure that these banks have. Central banks are completely incompetent and unaccountable and will front run you on inflation every single time, along with their commercial bank buddies. Bitcoin fixes this. It really, really does. If hearing all of these stories makes you feel fed up with the current system, then you're going to love this billboard from the guys over at crypto.com who are running this pretty cool Time for Plan B campaign. And they are damn right that it is time for Plan B. Be your own damn Swiss bank. Carry it with you in your pocket anywhere and send money to anyone, anywhere, at any time. No one to have to go and ask permission to for an account. No one who can freeze your account. That's very important. No one can stop you from spending your Bitcoin on what you want and giving it to who you want. Bitcoin is true financial ownership. Bitcoin is true monetary freedom. The emission rate of Bitcoin is hard coded in. No central bank can arbitrarily announce a rate cut to Bitcoin. No bank can steal your deposit when rates get cut. There are no bail-ins for Bitcoin to steal your money when the banks gamble and lose again, and they will. There are many reasons why I hold Bitcoin, but the complete and just utter insane depravity and dysfunction of the global banking system may be one of the most important reasons why I hold Bitcoin. Bitcoin is a vote for a better monetary future. It's trading fake money for real money every time you buy a Bitcoin. This is why the day-to-day price noise really doesn't bother me that much. Because I'm not here just for fly-by-night speculation. Look, I might have come in for the sick gains, but I am damn sure sticking around for the financial revolution. Bitcoin is the plan B that we need because plan A, it is obviously not frickin' working anymore. Anyway, thank you guys for watching today's video. I hope that this has been an interesting insight into the dysfunction of the banking world for you. I know you guys know a lot of this crazy stuff already, but it's just, wow. Banks, man. Banks. Anyway, if you did enjoy it, make sure to hit that thumbs up button. If you are new around here, please subscribe to the channel and click that bell to know when I put out a new video. Long live the blockchain, and peace out till next time.